Remember how a month ago I made a video when Bitcoin was at $35,000 and I warned that it was highly likely that Bitcoin could sell off to $20,000 and I was worried about it selling off to $10,000? Don't remember? Here's a quick refresher. I think if Bitcoin breaks through $20,000 and gets a little bit lower, it would be enough to scare some of the new hands completely out of the market and create even more selling pressure. Okay, so now Bitcoin has broken through $20,000. In fact, it's broken through $19,000. So what's next? What do I see for the future? And more importantly, why do I think $4,000 Bitcoin is a target? Let's not waste any time when it comes to Bitcoin. I know why everybody's here. They all want to know exactly how low can Bitcoin go. We're in a crypto winter. There's no question about that. So are we closer to the top or the bottom of Bitcoin's future price targets? From Bitcoin's $69,000 high, which it set in 2021, we've already sold off 70%. So let's take a look at the past to see what other crypto winners did to Bitcoin over the time so that we can get a general idea of what we might expect from the current crypto winter. We're going to start with 2013. Bitcoin was created in 2008 or around there, but it didn't really start seeing serious trading until 2011. And its big crash in 2013, its first crash in 2013, saw it drop 82.65%. However, that pullback happened within a 24-hour time span, so it's not really a good example of what a crypto winter is. So let's move forward to the next crypto winter and take a look at what happened to Bitcoin then. This is more like it. When it comes to a crypto winter, it lasts for quite a long time. And this one lasted from November of 2013 to January of 2015, so a little bit over a year, and over that time, Bitcoin dropped 86.9% from its high to its low. Bitcoin's next crypto winter is actually its most recent crypto winter, and we'll discuss why I don't think the sell-off in March of 2020 constitutes a crypto winter. This one happened when it sold off from its high near $20,000 in 2017. From December 2017 to its low of December 2018, a full year, Bitcoin pulled back a total of 84.12% from its high to its low before it bottomed. Next up, we're going to talk about the sell-off from January of 2019 to March of 2020. And the reason why I don't think of this as a crypto winter, even though it did last over a year and sold off more than 72.26%, was that it was a black swan event. The world was worried about the health crisis, and every single market, not just crypto, sold off significantly. Historically, Bitcoin was actually in a bull market at that point and could have been headed to higher highs if it wasn't for that unexpected black swan event. However, if you do include this sell-off as a crypto winner, then it could give you optimistic news, since the sell-off was only 72%, and that's about where we are in the current sell-off in 2022. But for the purposes of this video, I'm looking for worst-case scenarios, so we're going to ignore this one. So when we go to Bitcoin's current crypto winter, we can see that it's already sold off more than 73% from its $69,000 high, which it set in 2021, to where it is in June of 2022. And if you compare it to March 2020's Black Swan event, this is positive because it looks like we might be approaching a bottom. However, like I said, I don't consider that March 2020 sell-off to be a crypto winter. I think that was a Black Swan event, so we're going to remove it from our analysis from here. So let's average our crypto winners together, and that gives us an average pullback of 84.56%. If you apply that to the $69,000 high that Bitcoin saw in 2021, that gives a price target of $10,650 or around there. However, when you take a look at the current crypto environment, you have to take into consideration there are a lot more players in the space, there's a lot more leverage being used, and there are a lot more shady instruments that are being applied to this market. So what's an alternative price target if we're looking at a really worst case scenario? Going back to the sell-off from 2017 to 2018, you can see that the second biggest crypto, Ether, sold off a total of 94.3% from its high to its low. Now granted, Ether was new to the markets, but that doesn't mean this is impossible. One of my key adages is that nothing is impossible, particularly in the crypto space. Never confuse something that's improbable with being impossible. I've been in the stock market since 1998. I've been in the crypto market for almost half a decade. And I can tell you that the unexpected almost always happens, no matter how improbable. Nothing is impossible. So if we applied a 94.3% pullback to Bitcoin, that gives us a price target about $3,950. And before you disregard this, you have to remember that just 2 years ago in March of 2020, Bitcoin pulled back to $3,850. So this is a possible price target. So looking at Bitcoin on a chart, you have to kind of determine for yourself where you think we are. In 2017, Bitcoin pulled back to the $10,000 mark and stayed there for a brief period of time. It pulled back to the $6,000 mark and stayed there for months and months, and then pulled back to its low of $3,130 in December. So based on Bitcoin's current pullback, do you think we're at the $10,000 level, the $6,000 level, or the $3,000 level? If Bitcoin's at the $10,000 equivalent, that means that $3,900 price target is very realistic, and it's something that should be planned for. If you think we've already shot through the $10,000 mark, if you think that $30,000 was this crypto's winter $10,000, then that means that we do have a pullback from where we are now, the equivalent of $6,000, down to that $3,130 mark. And that would give you a price target of around $10,700, as we discussed a little bit earlier. If you're seriously optimistic and you believe that the March 2020 sell-off was a crypto winner, then now might be a good time. It might be a bottom and we might go higher from here. A lot of crypto players try to use fundamentals and apply them to this space in order to try and figure out whether or not we're oversold enough, but that's not applicable here. Even though Bitcoin and a lot of cryptocurrencies do have use cases that might work into the future, they're not being used yet, which means they have no fundamentals. So you have to look at the technicals. A lot of people who are new to the crypto space will refer to the sentiment indicator, which shows exactly how bullish or bearish Bitcoin is at the current time. There are several issues that I have with this. First off, the indicator was created in 2018, so it doesn't really have any long-term sentiment measurement. Second, while the two guys that created the indicator are quite intelligent, both of them are software engineer programmers and not statisticians. Even the experts have a hard time analyzing qualitative data using quantitative methodology, and I am a person who has a master's degree in communications and statistics from Syracuse University, so I know what I'm talking about. I'd love to have these two on the show to discuss what their model is, but when I look at it, it doesn't seem realistic. As you can see here, they say that it currently is at a 6, with 0 being the low. But seeing how the artwork that they currently use is what CNN used to use for its own stock market fear and greed index previously, it's hard for me to take them seriously. This indicator could very easily just be someone sitting at Photoshop and saying, hey, it feels like a 6 today, pointing the arrow to a 6 and then releasing it to us. Without knowing what their methodology is, there's no real reason to believe there's any credibility behind this figure, so I do not use this to determine whether or not I'm buying or selling. In fact, a very popular crypto trader in the space did make a play on Bitcoin because he said the sentiment was low, and where did he get in? $28,000. So obviously we have a lot lower we could go based on sentiment. The next issue is we have huge players in the space in the terms of MicroStrategy with the CEO Michael Saylor and Celsius Network, which claim to be a DeFi bank. Both of these organizations have huge loans out on their Bitcoin that they use to buy more Bitcoin, and the most immediate risk is Celsius. Celsius is at risk of what's called a margin call, which means the bank will require them to pay their loan back, and if it's below their margin call price, they're going to be forced to sell the Bitcoin they hold. They hold 23,000 Bitcoin, and their margin call price is $14,000. So if Bitcoin sells below that, we could see a liquidation of hundreds of millions of dollars in Bitcoin. MicroStrategy with CEO Michael Saylor claims that their margin call is actually around $4,000, that they have enough Bitcoin they could apply to the loan to lower the margin call to that price. However, you have to remember, MicroStrategy got smacked hard in the 2000s because they lied about profits. They claimed they had profits during their earnings reports, and in reality, they had losses. Now, while that was 22 years ago, I subscribe to the adage, once a cheater, always a cheater, so I have a hard time taking them seriously. The last time we really analyzed what their margin was, it was around the $20,000 mark. However, we could say that they have enough Bitcoin that they could make the collateral lower than that. However, I feel like if it gets below $10,000, MicroStrategy could be at risk. So what's my approach to determining when we're going to hit a bottom when it comes to a crypto winter? Well, I'm looking for 3 very specific occurrences. First up, the big players must be taken out. Now, I'm not sure if Michael Saylor's a target, but the bears are salivating over Celsius, and they are going to push the Bitcoin price down to that price. I have no question we'll see $14,000. And before anyone says, hey, that's not possible, Luna got destroyed by one trade. One person put on a $300 million plus trade made and killed the entire $1 billion Luna coin. If you don't think there are big whales in the space that can do the exact same thing to Bitcoin, especially when they've got that tempting, juicy target down at $14,000, you are fooling yourself. My second indicator is that no one takes the bull seriously. I want to see everybody who's following Michael Saylor or Anthony Pompliano get on their case and just hate on them. No matter what they tweet, nobody believes it. Additionally, a good side indicator here is when CNBC stops tracking the price of Bitcoin. For most of CNBC's evening shows, they have what's called a little Bitcoin bug in the corner that shows you what the Bitcoin price is currently, and they actually pulled it off in 2018 because Bitcoin got boring. I want to see that happen too. Finally, the last big indicator that Bitcoin has hit a bottom is when the media outlets start printing stories that Bitcoin is dead. The media loves printing these stories, and it almost always happens at the bottom. In fact, during the crypto winter in 2018, a big news article came out and hit the front page of a major news magazine in December of 2018 declaring Bitcoin dead. And that's when it bottomed, and it went from $3,000 and started heading up to $69,000. Now, you can probably tell I am a long-term bull in the space, but you have to remember that everything could go wrong and Bitcoin could go to zero. So how do you approach the space? Everyone has to figure out how they want to invest in Bitcoin on their own. There are plenty of bears out there that say it's going to go to zero, and there are plenty of bulls who say it's going to go to $1 million. The best way to protect against risk is to only risk the amount of money that you can afford to lose in its entirety. Do not use leverage. Do not mortgage your house. Do not use your kids' college fund. This could go to zero. I'm not kidding. You have to realize that. Additionally, I don't want to be all in at a certain price and then have Bitcoin sell off 50% from that price. Not because I'm worried it could go to zero as much as I would like to buy at that lower price. And since I have a set price I'm not willing to risk more than, I have to use that amount in my calculations. For me, even with Bitcoin down under $19,000, I only have a 15% allocation of what I want. That's right, my crypto portfolio is still almost 90% cash because I want to wait for lower levels. In fact, even if Bitcoin sells all the way off to its 2018 low of $31.30, I will still have more than 20% cash in that portfolio. And the reason for this is I'd rather have cash on the sidelines in an incredibly profitable position rather than have it sell off dramatically and me have no money to put to work. I do not want to miss the bottom. I do want to get Bitcoin as low as it could go. If you don't want to plan your entire trade, you can always just dollar cost average. Buy a small quantity of Bitcoin every Friday or every Wednesday and just keep repeating that until you're comfortable with how much Bitcoin you've accrued or accumulated over that time. As for timelines, you need to think of this as a long-term investment. Now, because Bitcoin in the crypto space is so volatile, a long-term investment is usually just 18 to 24 months. However, given exactly how excited everybody had gotten over Bitcoin when it went to $69,000, it's better to have a real long-term horizon when it comes to this and think of it in terms of 5 to 10 years. Finally, if you can't handle the volatility of the space but you still want to be involved, stop looking at your portfolio. Just refer to whatever your plan is and don't pay attention to it. Again, making sure the money you risk is money you can afford to lose in its entirety. If you want to follow along with my own trade, I update it every week on Fridays in my Week in Review, 100% free of charge at my website, getirked.com. To learn more about long-term investing, check out some of my other videos here. Thank you for watching, and I'll see you in my next video.